Now, I'm going to be talking about the tensions in the Middle East that could rattle the stock market, but even if we initially see the market rattled, we still may attempt to rebound, or we may just see a relief rally. I'll explain why in just a few minutes. Are forming bullish divergences here with the sell-off that we had on Friday. We still may go lower. I'll show you that later in the video. And about the 60-minute chart, head and shoulders top. No distribution is happening, but we attempt rally surrounding the 50-period moving averages in the daily time frame. That's what I'll be talking about. Touched on charts and talked about the crash taking out support levels. Does the Dow that's dropped 5%, does it attempt to rebound, attempt a short-term rally for just a little bit longer, again with these bullish divergences? And maybe the bullish divergences are done. I'll talk about this later in the video. So again, be touching on Iran's attack on Israel in response to the Israeli attack on the embassy, I believe in Damascus, that killed military officials, high-ranking military officials from Iran. Talking about what's next now. Going to be an Israeli response. That Israeli response that is all but certain going to happen. It's likely going to be something that is going to greatly rattle the stock market, and I will explain to you why. Less concerns about World War III, major war, regional war, and a lot of concerning things. But if we initially have some volatility, we still may experience a relief rally if Israel doesn't immediately respond. And I'll be talking about all of this and explaining this could impact the stock market and rattle things. I talked about this in previous updates. We knew Iran was going to respond. So again, do things calm down by Monday and there's a relief rally, or do we have volatility in a relief rally, or do we see the bottom begin to fall out of the stock market? Guess is either you're going to have volatility and get a relief rally, or relief rally, one or the other. Still possible this is catalyst that gives us something bigger right here, right now. But I'm just telling you, you've got bullish divergences, gaps that can still be filled at key support levels. Things to consider going into the earnings next week, seeing the 10-year Treasury note yield begin to come down, watching all of this. What does oil do? If the market is rattled, how much, or is it short-lived? We've seen with other tensions with Russia and Ukraine and Iran and Israel and Hamas. Talking about all of this, but it's likely really going to be rattled when Israel responds to this. I'll explain all of that in just a moment. If you want to see some of the charts like this, talking about them, watch the video all the way through. Now later in the video, we're showing you bullish divergences that are happening on the intraday charts. We're hitting the support at the 50 period. Still break these levels and break on down. But again, NASDAQ here in the weekly time frame, it's been going sideways for 7 weeks, and we haven't broken down. If we do break down, be very bearish, still have a triangle here, but we know that distribution is underway here at these levels on NASDAQ and S&P 500, just like back over here at the July peak, back over here at the 21 top and the lower high that's set up. It may not be done yet if we attempt the Dow go back and fill its gaps. That's all I'm saying. Gaps may not get filled at a later date, but I'm just saying you now have 3 gaps on the Dow as it's forming bullish divergence and becoming very oversold. It may not be done. It may go and become more oversold, or maybe we attempt to fill one or all of those gaps. But I'm just telling you, look, we've got distribution going on. All these red arrows are saying that the institutions are selling into the rally. I'll show you in the video important things. Just know that tensions are now heating up in the Middle East. And again, geopolitical issues do sometimes impact the stock market. Sometimes they don't, sometimes they do. This one very well could. More about that. The Iranian response rattle the stock market? Maybe. Or is there a sigh of relief? We get a relief rally. Maybe the Israeli response to this attack would be what really rattles the stock market. Talk more about that in a minute. But keep in mind, we are experiencing distribution here on the NASDAQ and S&P at these levels. It's a weekly chart of the NASDAQ. Now here's the S&P weekly chart. Again, getting distribution. Please support the channel with the link directly below. That allows me to be able to provide you this information. I don't have any sponsors, just a direct relationship with you, but I do need your help in order to make it work. Please consider supporting the channel today. If you follow the link below, it'll take you to a secured site. You can donate any amount you want. I thank you for your consideration for that. I talked about the distribution with the NASDAQ. Here's the distribution going on with the S&P. I'll talk more about this. I want to show you the distribution, compare it to the daily chart. So I'll talk more about this in later in the video. Now, we had the market sell-off ahead of the weekend. It was expected. We've talked about this from last weekend. And again, U.S. officials have said, again, that Iran was about to launch an attack on Israel. Expected that over this weekend. But like I keep saying, again, sometimes these things rattle the markets. Sometimes they don't. I'll talk more about that in a minute. When Russia invaded Ukraine, initially there was some volatility, and then the market shrugged it off immediately. Israel launched its ground campaign into Gaza. Ahead of it, there was some volatility, and then again, the market ignored it. It's right around the time we got the October bottom there, 2023. But I've been warning you that this is coming, but the market still may shrug it off initially. This isn't the attack that the market could have a big drop on. Again, it may drop, and we've seen Bitcoin drop down, and we may see volatility, but it's when Israel responds to this attack, you're probably going to see some real volatility in the stock market. As I'm making this video on Saturday, Iran has launched hundreds of drones and missiles. But Israel has defense systems that other countries in the Middle East do not have. And they intercepted, and the drones were taken down. None of them reached Israeli soil, and 99% of the threats, which there were about 330, 99% of them were intercepted, but the news outlets are reporting that none of them reached Israeli soil. They do have amazing defense technology, Iron Dome, and all these other things. Remarkable. So, no damage. Still could be. Iran has proxies surrounding Israel, and to the north of Israel there is Hezbollah. Israel's recently dealt with Hamas, so they're to the south, still dealing with them. Their abilities have been crippled due to the Israel-Hamas war. The Houthis, some of these other groups surrounding Israel could add additional response. Iran has closed down the space for the next 10 days until the 23rd. Israel has done the same. There's going to be a response from Israel. How long that takes, we'll see. Could be sooner rather than later, or it could be next weekend. Market shrugs this off because the threat, 330 threats, and the drones and attack, they successfully were able to deal with it and dodge the bullet. And they have amazing defense systems. There's going to be a response, and whether that happens at some point here going forward, or the weekend ends, or the next week, or take a little bit of time and do it next weekend or the following weekend. It could be they respond immediately, or there could be a delay. Look at Iran. Iran had a delayed response. Israel could do the same. So we'll be watching to see what happens, how this impacts the stock market going forward. Is going to be an Israeli response. That's likely going to rattle the stock market. Now this could, listen to me, this could actually give some volatility right at the 50-day moving average on the S&P 500 and NASDAQ. Bitcoin was at it, and it's breaking it. It's going on. But there'd be a sigh of relief that Israel was able to avoid damage. Attack really didn't amount to much because hundreds of threats, 330 threats intercepted, and 99% successfully dealt with. One reached Israeli soil. Say this, I'm going to explain a couple of things. This could impact the stock market going forward. This could initially give us some volatility. Now moving into earnings season, it may just shrug this off, initially shrug it off, or have some volatility and then rebound. Is this the catalyst that does it? There's fear that this is going to begin to escalate to a major war between Iran and Israel. If you go on social media right now, World War III is happening all over media. Israel warned before this retaliatory attack on Israel, Israel warned, Prime Minister Netanyahu warned that Iran had better not launch an attack directly from Iranian soil or Israel will respond directly, and warned of attacking Iranian nuclear sites. That's likely going to happen now. And that's why I'm saying the stock market, this attack right here, start rattling the stock market, or the market may shrug it off. It's the next attack that is probably going to, it's the Israeli response to this attack that is going to really likely rattle the stock market. And a lot of times these geopolitical things, market has an initial reaction for a little while, and then it goes away. Sometimes it just shrugs it off, like with Russia invading Ukraine. See if we start to do technical damage now. Market shrugs it off or has some volatility and then attempts to rebound. But it's the Israeli response to really produce a lot of volatility because, again, Iran and Israel have not really had a direct conflict. Iran has proxies surrounding Israel that have launched attacks on Israel, but Iran has not done it directly. This time, they did it directly from Iranian soil. The drones and the missiles, they came directly from Iran. This is what Israel said not to do. Israel's going to respond now directly to Iran rather than the Houthis or Hezbollah, some of these other surrounding groups. Now, Iran fired 330, actually, as we know right now, missile drones at Israel. 9% were intercepted. The U.S., though, is saying that it will not support a counterattack against Iran. So Israel's going to likely do it alone. And the Biden administration is confirming that the ballistic missiles and the drones were intercepted. Iran is warning its response will be stronger and more resolute if Israel retaliates following these latest strikes. Israel is going to respond to this. I'll explain something to you about the tensions in the Middle East. This could impact the stock market. This attack right here, like right now, Bitcoin dropped. Just bring it up here because NASDAQ is doing the same thing Bitcoin is. Bitcoin is forming a triangle. It had a false breakout, and then it dropped. Friday, it sold off with the market. It was about inflation, concerns about the tensions in the Middle East between Iran and Israel, and it sold off as well, about 4%. We saw the Dow drop, 475 points, and we saw drop. Well, it was at the 50-period moving average there on Friday as well with NASDAQ and S&P. Now, it's broken it, but it's recovering. It had dropped for the Saturday session 8%, and it only ended down 4.5%, at 4.61% to be exact. It recovered, and then it started having a little bit more volatility as we started the session as attack was underway, and then it got a doji, or trying to get a doji here. We'll see how it closes on Sunday, but it did break down from the triangle, had a false breakout. It didn't break this level of support, but it did take out the 50. So again, I'm going to be watching. Market initially shrug this off, get a sell-off like what Bitcoin did, and then attempt a rebound. We'll be watching to see what happens. If we get a bigger drop or not. Things calm down by the time the market opens come Monday, and there's a sigh of relief. So this is what happened with Bitcoin. It broke down from the triangle at the 50. NASDAQ is at the 50 with the triangle with the close there on Friday. So we'll be watching to see what happens with that triangle with NASDAQ. I want to continue to point out the Dow has 3 gaps that have not filled. Become very oversold. So again, even if we go down lower, it could still attempt to rebound. This is predicting in the next 2 sessions we'll get some kind of update. But as I said in my last update, we could go lower before we go higher. The question is, do we put in a top and start reversing and crashing, moving in towards the start of a bear market? We buy a little bit more time. It could if the market shrugs us off as we're now here in moving into the heart of earnings season here. I want to explain something to you. Iran has a nuclear program. Israel is deeply concerned about Iran getting a nuclear bomb. Iran has about 15 nuclear sites. 5 of them are crucial to their nuclear program. Now they have the capability to make a nuclear weapon. They have not yet assembled one. I believe that they have uranium now and the ability to do so. It will likely attack those nuclear sites for Iran assembles a nuclear weapon. This now gives them the reason to do that because Iran, in my opinion, made a huge mistake launching the attack from Iranian soil. Israel warned before they responded to this, they did that Israel would directly attack Iran. And that has not happened. A direct conflict between Iran and Israel. There's been conflict between Hezbollah and Israel. There's been conflict between the Houthis and Israel. There's been conflict between Hamas and Israel. These groups are supported by Iran. Not been a direct engagement between the two. Now there is. When Israel attacked the embassy, I believe it was Damascus, it's not directly in Iran, but Iran launched the attack from their soil because they are the embassy Iranian soil, which is what embassies in other countries are usually considered. So they attacked directly from Iran. Now Israel is going to respond. This is what you need to be watching now. Response could come soon. It can be delayed, and we can get it next weekend or the weekend after that. There could be a delay. And delayed. That if Iran did that, they were going to attack their nuclear sites, and that's likely going to happen now. It's likely going to really rattle the stock market. It's heating up in the Middle East now that we'll have a direct conflict between Iran and Israel. So market breakdown immediately. This sigh of relief. The Dow probably has already peaked, but we have a couple of gaps that we might try to rebound and go back up. Phil, we'll be watching. NASDAQ's been going sideways for 7 weeks. Does it break down in the triangle or does it break up? We'll be watching that. Watching to see what does the market do. And again, don't get me wrong. The market still could be rattled by this. Okay. Did you hear what I just said? The markets could still be rattled by all this as tensions escalate. Also could just breathe a sigh of relief that, hey, launched this attack, but nothing happened because Israel intercepted the drones and the missiles, the rest of it, and all the threats contained and did not reach Israeli soil. The Biden administration, Biden saying, hey, there's really been harm done, so we're not going to respond. So Israel likely going to have to go this alone, and they are going to do it. Tensions are going to continue to rise. It'll be interesting to see if we drop, and that's it. We try to get a short-term relief rally for a while, drop and then get a relief rally, and that's it. We try to get a relief rally with earnings for the short term before Israel responds. And again, I have no idea if Israel is going to respond immediately when the October 7th, I believe it was October 7th attacks, they did not respond immediately. They took their time. Iran, their embassy was attacked. They did not respond immediately. They took their time. You got to wonder, is Israel going to have an immediate response because the Israeli defense forces are on high alert right now, so they could be ready for it, whether over the weekend or on into next week, or they might wait until next weekend to do it, the weekend after that. It might be a delayed response, like Iran had a delayed response, like Israel had a delayed response responding to Hamas. Some interesting things, or I should say really some concerning things, as tensions rise in the Middle East. Nobody wants war, but again, Israel is likely going to attempt to deal with the nuclear threat at this time, and this gives them now a reason to do it. Iran launched the attack from Iranian soil. I said Israel has defense systems that no other country in that region really has. They had this entire threat, and it didn't even faze them. Not so with Iran. When Israel goes to respond to this, those nuclear sites are likely going to be a target that could really rattle the stock. This whole thing, when Israel responds, it's going to really rattle the stock market. Could be the start of it. Maybe, a big down day on Monday. I talked about is getting oversold. You got the Dow down now 5% and to form bullish divergences with the RSI and so forth. Is there an initial volatility with this? And this is it. This is the final nail in the coffin for the market. Does the market get the relief rally when Israel responds? Then we really see the market begin to get rattled by all of it. But these geopolitical tensions, hard to say. Sometimes they rattle the market. Sometimes they don't. This one would do it along with the Israeli response. But Israel is likely going to respond to this, and it's probably going to respond to it in a very strong way, hitting some of those nuclear sites send a message to Iran, don't try this again, and send a message to other enemies of Israel that don't even think about it. And that's why they're going to have to hit, and they're going to hit hard. We'll see what happens next week with the start of the market on Monday. Going into some earnings now. We have a bullish divergence developing on the Dow. Maybe it's not done yet, and the Dow drops further and forms more of a channel. So I talked about my last update, and the divergence is not done yet, and we go lower here. Still hold above this low right here, forming a divergence where price goes lower, but you get a higher low on the indicator. This is the Dow 60-minute chart. And since our double top here with the S&P and the Dow Dow's now dropped over 5%, S&P's dropped 3%, NASDAQ's dropped just over about 3.25% or so, under that I should say. With the divergence that's already in place, I wonder if a sigh of relief, you get a relief rally. Again, it could still rattle markets. Bitcoin right now is attempting to recover. Uncertainty of the extent of the attack. Now we know that, hey, drones and missiles were intercepted. So again, geopolitical issue. Sometimes the market just shrugs it off. Maybe we could just get a relief rally. We'll see. We could have volatility. Don't get me wrong. We could break these support levels at the 50 period on the NASDAQ and the S&P. It's doing it, but kind of bounce off horizontal support. So we'll see what happens. If we get some initial volatility with it, we still may attempt a rebound. The Dow again has all these gaps, so I'm watching. Maybe we don't fill these gaps at a later date, but it is possible. We have 3 gaps now on the Dow, here and here and here, that we may attempt. Well, NASDAQ and S&P filled the previous two. The Dow's not filled any of them, forming a bullish falling wedge here. So again, the Dow is now becoming oversold, forming divergences on indicators. It's not done yet. Maybe we go lower, but again, there could be an attempted rebound to fill some of these gaps. Maybe all of them, maybe some of them. There is a delayed response from Israel, may get an attempted rebound back up to fill some of these gaps. As I've said, the Dow very well may have peaked. So again, if we do attempt to rally, there is a delayed Israeli response, likely rally until that happens. But when we get that response, it's likely going to really rattle the stock market. Keep that in mind. The market might fuck this up because of the lack of damage, the lack of casualties. Israel responds, really going to be a lot of concern. This may start it, see if the market shrugs it off or not come next week as we're going into the heart of earnings season now. S&P is at the 50 period. It's at this horizontal support level. Again, maybe it takes it out like Bitcoin did. Maybe we have to become further oversold before we get a rebound. But again, we are moving to oversold territory. We're not quite there yet, but we are moving towards it. And if we get a relief rally off the 50, then maybe we don't reach that level. We'll be watching, see if we get a big drop come Monday, or if we attempt a relief rally for the short term. And I showed you the Dow because the Dow's taken the biggest hit. Dow has dropped down by more than 5%. S&P's only dropped 3%. Well, we're at the 50. It's been taken out here. So again, in the 60-minute time frame, doing damage, okay? A relief rally, we could try to turn back up here as we turned down over here. You know, you came down, you overthrew the 200 here, you overthrew it here, but then you turned right back down. Do we turn right back up? The relief rally, or do we get a bigger dump holding below the 50 and now start taking out, or holding below the 200 here and now start taking out the 50 in the daily time frame? Look, I expect we're going to get a bigger sell-off. I'm looking for a bear market to start here, looking for a major top. Maybe that is starting right here, right now. Also possible that we try to bounce off the 50 period on the S&P and NASDAQ as well. So we'll be watching to see how it unfolds. Parameter stays in the negative region. If we stay below the 200 period, then look out below. If we rebound, it will buy the market more time. So watching to see what the market's response is come Monday's close and during the session. Just know an Israeli response is going to happen. Don't respond immediately over the weekend or early next week. There might be a delayed response into next weekend or the weekend after that. There's going to be a response. Watching to see what happens with the stock market. We get a lot of volatility. We get a relief rally off the 50 period moving average. Make an attempt for the Dow to go back and fill those gaps. S&P and NASDAQ have the gaps now from Friday, gapping lower. Now, S&P 60-minute chart, the RSI is forming a divergence just like the Dow is. Now, again, maybe it's not done. Maybe we drop down further, attempt to rebound. You got the 50 dropping down here. It's not taking out the 200. We've seen that happen already on the Dow. Again, we've got a little miniature double top just like on the Dow, and then we got a lower high right here, and then we stalled at the 50. We got above it here, filled the gap, dropped. We talked about a gap and trap here on the intraday charts, and then we rallied back up. The waterfall sell-off, we had nearly 4 hours of selling, remember that? We stalled at the 50, sold off, ended up gapping lower, rallied back up to fill the gap. The Dow did not fill that gap. NASDAQ and S&P did. Okay? The Dow did not fill the gap up here. S&P did. And now we have another gap lower. We're watching this gap. And again, do we go lower and then come back eventually and try to fill the gap, still establish a lower high, or do we attempt to get a relief rally off the 50-period moving average? But you got divergences here. Maybe they're not done. Maybe we go lower. But again, they could be done. I'll be watching these intraday charts come Monday. I'll be watching futures open on Sunday. Maybe by the time you listen to this, maybe Israel has already made an immediate response. I don't know if they're going to do an immediate one or a delayed response, and had a delayed response. And when Israel moved ground forces into Gaza, there was a delayed response. So again, that could buy the market some time. I'll be watching. Is this divergence done or not? Maybe it's not. But 2 days, we should get a bounce. We may go lower before we get the bounce, as I talked about with the VIX having exceeded 10%. Here's the falling wedge that I was trying to show you, and I did a lousy job of drawing it on the daily chart. I did a great job here on the 60-minute chart. Look at that. That's beautiful. You got a bullish falling wedge, okay, a channel, okay? And again, if we go a little bit lower, look at this right here. You've got this horizontal support, and maybe we're already at it with this level right here. So again, you got this little support area here. S&P is coming back and filling the gap from back over here. It never did fill, and we're filling. Whoops, I got the wrong end of that. And down here, the close was right there. We're filling that gap there on Friday. So you've got the gap fill and some support in here, taking out that 200-period moving average. Talked about the possibility of a head and shoulders pattern. If we come down a little bit lower and rally back up to try to fill that gap, you could get a right shoulder, and that could be the end of it, and that could mark the peak over here. Again, we hit this high, and we went 3 points above it right there. But again, look at momentum. Becoming oversold as we're coming to this level of support. So you got to wonder, do we get some initial volatility and then attempt a relief rally, or do we just attempt a relief rally, but we could come down and hit this lower boundary right here and maybe breach the 50 short term, but then still attempt a rally. So just some things I'll be watching, but we are on the Dow and the S&P becoming oversold. If we get a lower high, you got a shot at a head and shoulders. If we go back and you get a gap and trap, you can still go up and try to flirt with those highs, buying a little bit more time surrounding earnings season here. Create a blow off top going up to the upper channels that I've talked about in my last update. Those trend lines on the weekly chart, which are directly overhead. If we can't get the traction back up, it's possible we have the high in, do more technical damage. So again, I'll be watching this area. Do we just start blowing through it? You know, I talked about in my last update, do we take out these levels of support? S&P's moved back towards it. NASDAQ's been sideways at that horizontal support level again, above it, now forming a triangle. Take out these support levels and start breaking down immediately and get a bigger sell-off, attempt to rebound, and the Dow goes back up and tries to fill some of those gaps, or maybe all of them. I'm saying it's still possible we attempt a relief rally. Again, NASDAQ's been going sideways for 7 straight weeks. It's resting this week at the 50-period moving average. Last week, it tested the 50-period and it bounced. It's doing it again. Momentum turned back to bullish on Thursday, turned back to bearish on Friday. Concerns about inflation, concerns about tensions in the Middle East, back at these 50-period moving averages on the S&P and NASDAQ. Oscillator still negative territory. It turned to a green bar, went back to red. Again, if we start breaking the 50, start getting the bigger soft right here, right now, then we go negative or remain negative here, take out the 50, take out the support level I talked about in my last update. Take this level out, the 50, come back a little bit lower to horizontal support. We're just above it, and then try to bounce or take that level out. Again, I'm watching. Do we get an immediate break of key support levels in the 50? We attempt to try to bounce around these levels. We get a relief rally, and we try to bounce around the 50 or break it and bounce. You could still try to form a divergence. Both a bullish and bearish scenario, and it really depends on if we break support. Bitcoin's breaking its triangle. Maybe the NASDAQ breaks its triangle. We'll see what happens. But Bitcoin is opened 24/7. It was opened trading over the weekend with the Iranian response to Israel. The markets are closed. So again, we'll be watching what happens. Get a big dump, or do we get a relief rally? Watching, does this remain negative and go deeper? Does the MACD go negative, or do we attempt to go back into positive territory, establish a lower high, or get a higher high for the short term? At the 10-week moving average, slightly below it there. And again, we've got two red awesome oscillator bars. We got our negative divergences on the NASDAQ weekly chart. You've got it here on the awesome oscillator. Whoops. I'm trying to draw the trend line there. You've got the divergence going on. So again, do we start breaking down immediately, or do we buy a little bit more time? The triangle can be a reversal pattern to the downside, or it can be a continuation to the upside. It could be either one. Looking for clues, but if you start getting a bearish reversal of conditions here, well, maybe that's all she wrote, and that's what I'm looking for. I'm looking for signals to confirm a reversal. We don't have a bearish reversal of conditions here. We do in the daily time frame, again, showing momentum is down at the moment. It's been going back and forth on NASDAQ. It's been down on the S&P. But sometimes funny things happen. Sometimes you get a second or third red bar, and sometimes you get a rally back up. Here we had the red bars going on, and we rallied back up, but we got a lower high for the September rally after the July peak. Sometimes you get a higher high, sometimes you get a lower high. So again, wouldn't be surprised. Dow attempted to go fill some of those gaps. We have gaps to be watching from Friday on NASDAQ and S&P 500. Dow has three gaps. It has not filled any of them. No denying we have these divergences. Again, I think they're going to play out. The question is, do they play out immediately? I talked about my last update. Do we buy a little bit more time? S&P got our first red awesome oscillator bar. P got the hanging man candlestick the previous week. It confirmed that candlestick. Now we need a follow through. We're right here at the 10-week moving average. There's no bearish reversal of conditions yet. If we start dropping further, decisive push below the 10 period, which we're right at it right now, then maybe all she wrote and the top is in. The S&P is just slightly under the 10 period moving average, but it's not gotten a bearish reversal of conditions yet. Again, we got our first red awesome oscillator bar. Again, maybe we break it and we come back up like we did over here, or maybe we just try to rebound and get an immediate relief rally. We'll be watching to see which way it plays out. It could play out either way, but I'm looking for signals to turn bearish here. S&P is getting oversold, but not at extremes yet. We'll see if we go and take out the 50-period moving average, if we try to bounce off of it. One thing I've been talking about is the awesome oscillator still could try to turn up, or like NASDAQ, it may go negative and then try to turn back up and get a lower high or form a divergence in the more recent price action. Talked about that possibility. Again, I'm playing that trend line that we hit back over here. We only went 3 points above it right here, and then we began to turn, and we've seen momentum turn down. We just pull this down so you can see it a little better, but again, holding below the 10 period. Now the 10 is below the 20. Get back above the 10, you drop below the 50, you can get a bigger drop. Support's got to break. We get these bearish signals in the weekly time frame. Try to turn up for the short term. We could drop and rebound, or get a bigger drop and rebound. That could look something like this, where it goes negative and comes back up and then goes down, and you confirm a lower high, or if you try to bounce here, you can get a divergence. But again, momentum signals have been bearish. Now some of this signals are starting to turn bearish, but we need to see the weekly chart get a bearish reversal of conditions. Momentum's bearish. I could try to turn bullish, but turn back to bearish. Remember, the Dow, S&P, they're forming those bullish divergences on the RSI in the 60-minute time frame. Now, back in March, right after the Fed, I told you we could get a post-Fed sell-off. I told you to be watching this trend line for it to be hit. we hit that trend line. The shorts were going to pounce on it right there. They did. That's where I went short. We tried to get a little miniature double top. We turned back down. Got that on the intraday charts. If we go down further, my short position plays out. But if we try to rebound, again, I've talked about these trend lines coming up here. We still may try to bounce if we don't get a significant sell-off. I'm saying watch to see how the market responds to tensions in the Middle East. But it's just something I'm watching now. The S&P 500 got a hanging man last week. So did Bitcoin. Okay? And I'm watching to see what happens here. Does that mark a turning point? Because we did get confirmation this week. But as you know, with candlesticks, you got to get confirmation and then you got to get a follow-through. So if we start getting an immediate sell-off, then maybe we get the follow-through. The Dow attempts to go back and fill some of those gaps or all of them, then we still may attempt to rebound back up. But we've had a significant sell-off on the Dow of about 5%. S&P's dropped 3%. We dropped to the previous week just under 1%. And then this last week here, we dropped 1.5%. But from the high, we're down about 3% in totality. So tensions in the Middle East give us the confirmation and follow through, or markets go, oh, it's over. Let's focus on earnings and attempt a relief rally. We'll be watching to see which way it plays out. Either way, if we do get a relief rally, again, the market is likely going to be rattled as a delayed Israeli response to this attack. Delay it like Iran just delayed their response. Delay it a week or two. Market still may attempt a recovery. Keep that in mind. But we did get a hanging man, a sloppy one at that, but it is a hanging man. We did get confirmation to it. Now you need to see a follow through, and again, we may get a follow through and set up a head and shoulders pattern. I'm talking about that in the 60-minute time frame. They try to challenge the highs. So we'll see. Do we get that follow through breaking below this level here? Now, if we get the follow through, we can get a bigger drop right here, right now. Momentum signals have turned bearish on the S&P. We're starting to see some of the signals now. Trend begin to change, and we know here that S&P is undergoing distribution from last week. Distribution that marked the top over here. If we rally back up, we could see more distribution signals. The diversions give us about a 3% sell-off on the S&P. Critical mass cloud, we started to see other warning signs of distribution, liquidation taking place. The Dow had a critical mass line turn bearish. We haven't had that with the S&P or NASDAQ yet. Could it happen early next week? Yes. So far it hasn't. And again, trending signal, if it changes, we'll get a little sell signal like we did over here, and you'll see the red show up with the critical mass line. Now over here, when we got it, we went a little bit lower. We got it. We'd already had the warning signs over here, and it was eventually confirmed. We got it, but we still ended up rallying back up to get a lower high. Keep that in mind. Even if we do go lower, we still may attempt to get a rally back up to fill the gap we had on Friday, or maybe something bigger. Dow tries to fill some of those gaps. We are seeing the weakness with momentum. We are seeing a break below the critical mass line here. See how the market responds come Monday. Concerns about everything, or is there a relief rally that over, or concerns that it's going to escalate further? Do we see an immediate response from Israel? Is there a delayed response like Iran had a delayed response? Some things to be watching. But again, I'll be watching for that sell signal. We don't have it yet, but we do have the distribution here with the trend, which is in agreement with the distribution I'm seeing in the weekly time frame. And that's what these little stars and dots are. They're telling me where liquidation is taking place and distribution is happening. The red arrow is telling me we're seeing distribution with the breakaway, and it could lead to a reversal. Started to happen over here, but then it got canceled out, and we reaffirmed the bullish trend. We'll be watching. There's been a little bit of accumulation down here. We'll be watching to see what happens come next week and what happens on Monday, what the market's response is to all of this. I'll be watching. Do we get a sell signal come Monday or a relief rally? But these signals have been absolutely amazing, so I'll be watching for the next sell signal. I am starting to see some of my trending signals change. Here we're taking out the cloud. You're getting a sell signal. The swing trend line is moving to red with our recent volatility. Now we're going negative here, and we've been negative here for a few days. which they've been positive through the uptrend. Now they're going negative. So does that mean we're going to see the breakdown right here, right now? Buy a little bit more time. Keep your eye on what happens surrounding the 50-period moving average on NASDAQ and S&P. Now here, momentum signals have been going back and forth, currently bearish here. So again, we'll be watching that continue. Or do we get a relief rally? Balance of power has been negative. We dropped below the rainbow cloud. We're still below it. These are the daily charts of the S&P. We took out the critical mass line and we're holding below it. It's turned red, but it's going flat line. So again, either going sideways or we're about to get a drop, one or the other. It held as support on the way up, and now momentum's going negative. Critical mass 2.0, we're seeing red bars. We've dropped below the critical mass line in the critical mass cloud. We're in the red portion of the cloud, but the critical mass line has not yet turned red, and we're going flatlined at the moment here. So again, we'll be watching to see we get a big drop, or do we get a relief rally? The Dow try to go back up and fill some of those gaps, 3 gaps. We go a little bit lower and then try to rebound. We'll be watching to see how it unfolds. We do more technical damage. That may be all she wrote. If S&P does end up getting a bigger drop, you've got the gap support down here near VWAP support in the low 5,000 area. Should we take out the 50-period moving average? Currently, we're stalling at VWAP resistance here and holding below it. As I mentioned earlier, the micro trend is changing. We're taking that level out, and that's triggering a sell signal, but we're also getting the one-day trend. That's this little line right here. This is the one-day trend. That is also changing. So some of the trending signals are starting to change. We got to do more technical damage in the weekly time frame, not that 10-week moving average, but again, so far the short positions from this trend line, whoops, right there, so far those short positions at that level of resistance are playing out that we talked about at the time, that there would be short sellers lurking at that trend line. So if tensions in the Middle East, bigger drop right now, then do some severe technical damage. If we get a relief rally, still buy us more time. We are seeing momentum turn negative with this move. So again, we'll see what happens, but I still don't have a sell signal, firm sell signal yet with critical mass clouds. Got that, then that would likely seal the fate of the S&P 500.